you're struggling to keep up with your mortgage payments, you're not alone. In fact, you're in the same boat with a lot of people who thought SVB was a good investment. But don't worry, we have some tips and tricks to help you avoid living in your parents' basement until you are old and gray. So sit back, grab a cup of coffee, maybe some whiskey if you're super stressed, and let's get your mortgage back on track. And you'll want to stay to the end because there's one simple mistake that you don't want to make that could end up getting you in foreclosure if you don't have to, and ruining your credit for up to 7 years. Here's 5 things you can do to help you when you're falling behind on your mortgage payments. Number 1, bankruptcy. Starting off with a bang, I know. If you're behind on your payments, bankruptcy can help you in several ways. Number 1, automatic stay. When you file bankruptcy, an automatic stay goes into effect, which immediately stops all collections against you, including foreclosure proceedings. This means your foreclosure must be put on hold until your bankruptcy is settled. Number 2, Chapter 13 repayment plan. If you file for Chapter 13 bankruptcy, you may be able to keep your home by creating a repayment plan that allows you to catch up on missed mortgage payments. And you have 3 years to do this. This can actually help you avoid foreclosure and keep your home. Chapter 7 bankruptcy. If you file for Chapter 7 bankruptcy, the discharge of certain other debts may help you free up cash flow so you can catch up on your payments. However, it's important to note that a Chapter 7 bankruptcy does not stop a foreclosure. Number 4, bankruptcy can help give you time to explore other options, such as negotiating a loan modification, a short sale, or selling it for cash. Do you know there are some investors that will actually catch your payments up for you, put cash in your pocket, and take over the house? More on that later. It's important to note that bankruptcy is a complex legal process that requires consideration and consultation with bankruptcy attorneys, and that's not free. While it can be a powerful tool for stopping foreclosure, it's not always the best option for every situation, and you have to weigh the pros and cons. Number 2, reaffirmation. If you've fallen behind on your payments, you may be able to do what's called reaffirm your mortgage. When you reaffirm a mortgage, it means you agree to be personally liable for the debt secured by the loan, despite the fact that you filed for bankruptcy. Essentially, reaffirmation is an agreement between you and a lender that you're going to continue to make payments in spite of the bankruptcy according to the beginning terms for your mortgage. Reaffirmation is typically done during the bankruptcy process, but it saves you from a possible foreclosure. Reaffirmation is a good strategy if you want to keep your home and you're able to continue making mortgage payments. It can have significant financial and legal implications as well, so make sure you consult an attorney and weigh the pros and cons before you make any decision. Number 3, government assistance programs. Did you know that there's assistance programs out there, especially since COVID-19, that were designed to help you catch up on your back payments? Here's 4 of them. Number 1, the Home Affordable Modification Program, or HAMP. It's basically a loan modification that helps you catch up on your payments. The HARP, the Home Affordable Refinance Program. This helps you refinance your home, hopefully getting you into a lower payment, even if you have a high loan-to-value ratio. FHA and VA loan modification programs. These are just programs that help you actually restructure the terms of your mortgage, allowing the lenders to be more flexible with your payments, interest rates, ultimately leading to a different monthly amount, helping you catch up. And finally, the COVID-19 Mortgage Relief Fund. The U.S. government funded several relief funds that help people in COVID-19 who lost their jobs and fell behind on their mortgage. These include forbearance, loan modifications, and other additional assistance programs. It's important to note that the availability and eligibility of these programs may vary dependent on the homeowner situation or the lender's policies. If you want help with these, I suggest contacting your lender directly or a HUD-approved housing counselor to explore all of your options. With these programs, your interest rates may be lowered, even your principal balance, and if you're unemployed, you may be able to get your payments reduced or temporarily suspended. But these are government programs, so be prepared for a lot of paperwork. It ain't free money. It takes some work. Number 4, negotiate directly with your bank. While many lenders routinely offer some levels of assistance, it can be a challenging process that requires a lot of effort. But once again, you might be able to negotiate your interest rate or a reduction in your principal amount. Keep in mind that most lenders will actually want you to refinance your loan, but if you've fallen behind on payments, you may not be able to do that. So it's good if you see this coming down the line that you're not going to be able to pay, to start talks with your lender now. Negotiating with a bank is a tedious process that you can get lawyers involved with, and it takes a lot of bureaucracy and paperwork and patience. Make sure to stay calm, try not to be rude, I know it's frustrating, and ask for help from everyone you speak with. Some may be able to add a few months' payments back onto the primary balance of your loan. Remember, it's dollars and cents to them, and it costs them a lot more money to foreclose on your house than it does to modify your program. So you do have that in your favor. Number 5, borrow or sell to a private investor. A lot of times when people fall behind on their payments, you may look look at outwardly and say, why don't you just sell the home? You have tons of equity into it. But some people have what's called the ostrich effect, where they stick their head in the sand and they wait till the last minute before trying to find a solution. That's where we come in. If you're behind on your mortgage payments and you're ready to be done with the house and move forward, we can actually catch up your payments to save your credit, put some money in your pocket so you can get into the next house, and then you can be on your way avoiding foreclosure and bankruptcy. Here's the thing people don't understand. If you go through a foreclosure, it's very hard to get a rental property after that because people are going to pull your credit, they're going to do a background check, and they're going to see that you didn't pay your mortgage. And a lot of landlords don't feel comfortable lending to someone in that situation. So before you get to that point, or if you know anybody who's going to get to that point, reach out below, give us a call. We'd love to be able to help.